How to pass journal entry easy technique. According to English system, accounts are classified into three kinds: personal account, real account, and nominal account. And the rule of debit and credit is personal account, debit the receiver and credit the giver. Real account, debit what comes into the business and credit what goes out of the business. And the nominal account, debit all expenses and losses and credit all incomes and gains. In order to pass a journal entry, we have to follow the rule of debit and credit. There are four stages. First stage, find out which are the two accounts affected in the transaction. Second, find out which class the above two accounts belong to. Third, apply the respective rules to the above two accounts. Fourth, write the particular account to be debited and the account to be credited. Let us take first transaction, that is commenced business with the cash. Here, two accounts involved are cash account and capital account. And the second we shall see to which group they belong to. That is, cash belong to real account and capital belong to personal account. Now we shall apply the rule of debit and credit. Cash account belong to real account. So the rule is debit what comes into the business and credit what goes out of the business. Here cash comes into the business, so cash account is debited. Second one, capital account. It belongs to personal account. So the rule of personal account is debit the receiver and credit the giver. Here, proprietor of the business is giver of the capital. He introduces cash to the business so that cash becomes a capital of the business. Therefore, capital account should be credited. Now, we shall see the journal entry cash account debtor to capital account. Let us see second transaction, that is purchased goods for cash. Here goods purchased for business by cash. So two accounts involved in this transaction are purchase account and cash account. Let us see which rule we have to apply. Purchases account belong to a real account and cash account belongs to real account. So for both purchases account and cash account, one rule applies, that is real account rule. So goods comes into the business. Real account rule tells that debit what comes into the business and credit what goes out of the business. Goods comes into the business and cash goes out of the business. Therefore, purchases account should be debited and cash account should be credited. Therefore, journal entry is purchases account debit and cash account credit. Let's take another transaction, that is the commission received rupees 200. Let's find out what are the two accounts involved in this transaction. That is one is commission account and the other one commission received in the form of cash, therefore cash account. So we have to apply the rule now. Cash account belongs to real account and commission account belongs to nominal account. So let's see what is the rule for a real account. That we already know, debit what comes into the business and credit what goes out of the business. Here commission comes into the business in the form of cash. So cash comes into the business, cash account should be debited. And let's see which rule applies to commission account. Commission is a nominal account. The rule for nominal account is debit all expenses and losses and credit all incomes and gains. Commission received, it is a income, so we have to credit commission. Therefore, the journal entry is cash account debit and commission account credit. Let's take another transaction, that is machinery purchased from Z. Let us find out which are the two accounts involved in this transaction, that is machinery account and Z's account. Machinery account belongs to real account, therefore we have to apply the rule of real account. According to real account, debit what comes into the business. Here machinery comes into the business, therefore it is a debit. Now Z's account, it is a personal account, so rule of personal account we have to apply here. What is the rule for personal account? That is debit the receiver and credit the giver. Here Z giver of machine or machinery, therefore Z's account credit. Now let's see the journal entry. Machinery account debit and Z's account credit. Let us take last transaction, that is paid salary. What are the two accounts involved in this transaction? Salary account, and salary is received in the form of cash. Therefore, another account involved is a cash account. So, salary account belongs to nominal account. Therefore, we have to apply the rule of nominal account. What is rule of nominal account? Debit all expenses and losses and credit all incomes and gains. So salary is an expense, therefore we have to debit salary account. Salary account is debit. And which is the another account involved? That is cash account. Cash account belongs to real account, therefore we have to apply the real account rule. According to real account, debit what comes into the business and credit what goes out of the business. Here when we give a salary to the employees, cash goes out of the business, so cash account should be credited. Today we have discussed 5 transactions and how to pass journal entries, easy method. So let us see what are the journal entries one by one. Commenced business with rupees 1 lakh. Journal entry, cash account debtor to capital account. Second one, purchased goods for cash. Journal entry, purchases account debtor to cash account. Third transaction, received commission rupees 200. Here cash account debit and cash account debtor to commission account. Fourth transaction, machinery purchased from Z. Journal entry, machinery account debtor to Z's account. The fifth one, paid salary. Salary account debtor to cash account.